Hello, dividend growth stock investors. It's Colby, the DGI Crab, and we are back here with another episode of the Great ETF Race. This is episode number 16, and I'm here to tell you right now that VYMI, the Vanguard High Dividend International ETF, is leaving its 7 U.S. counterparts in the proverbial dust. I am absolutely blown away by what VYMI has been doing over these last few months. I think you all will be as well. If this is your first time here, I am doing this great ETF race by investing $5 every single week into 8 extremely popular dividend-focused ETFs to see which one will come out on top. But the greater point of the series is to show to you all that anyone can invest, regardless of whether or not they have a tremendous amount of money to invest into the stock market, because guess what? You don't need a tremendous amount of money to get started. And you also don't need a lot of knowledge about individual single stocks or be a nerd with a spreadsheet like me, obsessing over the individual stocks and reading earnings reports and keeping track of dividend growth streak history. You don't need any of that. You can just pick 1 or 2 or maybe even 8 different ETFs. Just dollar cost average a little bit of money into them each and every week, and you will see your passive income skyrocket over the long haul. So let's take a look at our competitors here, you guys. We're going to maneuver over to the spreadsheet here, where we can see our 8 competitors. And as you can see here, VYMI way out in front. I have this organized by the overall gain here, which is taking into consideration the stock price and the overall dividends that have been reinvested into the ETF over the course of these past several months. I've hit a nice little milestone here with it here, you guys. We're up to $2,000 invested into this account now, with $250 each exactly into the 8 ETFs. VYMI, this is a higher yielding ETF. Typically, this is going to be one of the higher yielding ETFs. It's currently yielding just a bit above 4% right now. So certainly not a low yield play. Only SPYD, the 80 highest yielding stocks in the S&P 500, that's what this one is comprised of, is currently yielding higher than VYMI, and that's generally going to be about what the breakdown is as far as the yield goes. But look at this here, you guys. VYMI overall, since I started this portfolio, is up $33.52. And the next closest one on the list is Vanguard's Dividend Appreciation Fund, VIG, up just $9.99. So a difference of more than $23 from VYMI. We are looking at an unrealized gain here of, let's see here. I mean, that's, we're going on about, what, 10, 15, 30%? Gosh, my mental math is a little bit off today. Sorry, guys. It's been kind of a long day. But I mean, a $250 overall investment, or not 33%, $33. We're looking at an overall gain here, pushing 15%, definitely comfortably above 10% right now. And of that gain here, you guys, only so far have we gotten $3.94 of that is in dividends. So most of that, despite this being a higher yielding stock, most of that is coming from share price appreciation, not just dividends. Because if we look here, this is only the 3rd highest dividend collection that we've gotten so far. We've gotten a little bit more from DHS, which is Wisdom Tree's high dividend ETF that pays monthly. So DHS has a little bit of a leg up on these other ones so far, because I have gotten an April and a May dividend from DHS. And then, of course, I'll get a June one as well. But the second quarter dividends, because all these other 7 ones pay out every single quarter on months 3, 6, 9, and 12, DHS has a little bit of a leg up because we've already gotten 2/3 of the dividends from Q2 paid out from this one already. And then, so that's why it is actually in the lead as of right now for the most dividends paid out, and then SPYD, of course, with 401 just right behind that. Now, when those Q2 dividends get paid out throughout the course of the month of June here, I would assume that SPYD is going to reclaim that number one spot. But VYMI, wow, I'm still blown away that this is the one that's done so incredibly well compared to the other ones. It's a pretty close race here between numbers 2 through 5. VYM at 984 overall gain, DHS at 934, and then DGRO, the State Street Dividend Appreciation Fund, sort of the State Street competitor against VIG. It's here at about 852. And then VBR, the small cap value fund from Vanguard. This one was in 8th place there for a little while, especially when the tariff war started. The small caps really took a beating over that point in time. And then SPYD's just kind of treading water here right now, down 33 cents overall, despite getting $4.01 in dividends. And guys, SCHD, hey, SCHD, Stan, I'm still with you, brother. I think that you've got the right idea. SCHD is still an excellent ETF for income seekers, but probably not the ETF that you want to be zeroed in on, you guys, if you are younger investors. If you're under the age of 30 especially, I think you're going to have a lot better results if you're focusing on something with a lower starting yield, but a much higher both dividend growth streak and share price appreciation. Because listen, SCHD, the dividend growth on it has been really, really good ever since the inception of the fund. It has been growing more than even one like VIG, which is all about dividend growth. But SCHD right now, you guys, it's just been on this 4-year flat line trajectory in terms of the share price. Now, if you're just retired off of SCHD, you own enough of it that it can pay all of your bills and you can live comfortably off of those dividends, then the dividend raises you're going to get on that year over year, not to mention the qualified dividend tax advantage income, is a great place to be. But if you're building up a portfolio and you're still trying to get towards retirement, I think you could probably do better than SCHD if you are really young. Get up into your early 40s, that's probably the best time to start piling away on SCHD. But hey, I'm not a licensed financial advisor. Don't take any of this stuff as direct financial advice, you guys. I'm just doing some research here, keeping track of this fun side portfolio, and wanting to show you how over the long haul these different individual ETFs are performing. But right now, the lead VYMI has is the most extensive lead that we have seen in the history of the great ETF race so far. We've seen different ETFs take the first place position at different points in time throughout the course of this last 10, 11 months since I started doing this portfolio. So if we're talking about the span of years and possibly even decades, that's going to continue to be something where things are going to shift around and move, and we'll see different ones do better at different times. But overall, this is a super diversified portfolio where we've got loads of blue chip stocks and a nice amount of international exposure here with the 1,500 or so individual single stocks that make up VYMI at any given time. Plenty of diversification too when you consider we've got small cap value in here, and then things like VIG, VYM, DHS, DGRO, and SPYD all are loaded up with great companies. There's going to be overlap between them, absolutely, but they all employ different strategies. And if you've been watching since episode 1, you can see that there are just going to be times where certain strategies perform better than other ones at any given time. But as dividend growth stock investors, the main thing you want to be concerned with isn't so much this number, the overall value of the portfolio. You want to see it going up, but if your goal is to get to financial freedom with dividends, you are mostly concerned with this number right here, the projected forward annual income that the portfolio is going to provide to you. So this one has gradually worked its way up here to $64.33, putting $40 a week into this portfolio with an average yield usually in around 3% or a little bit better. Yeah, it's giving me probably about $1.25 or so of annual forward dividend income every single week. But as the dividends continue to get larger and larger because those share price or those overall share counts go up and up, then my yield on cost is going to continue to go up as well. Because I'm not factoring in the cost in terms of the amount of money here that's invested. So every time a dividend hits this account and gets reinvested, the yield on cost ticks up just a little bit more. Every time we get a dividend increase out of one of these, that yield on cost ticks up just a little bit more. My hopeful goal here for the portfolio by the end of the calendar year, I'm hoping that this yield on cost is going to be up a lot closer to about 3.5%. And then every single year after that, you guys, because those dividends that hit are going to get even bigger and bigger, that yield on cost is going to continue to go up and up and up. And over the course of multiple years, the longer that you're in the market, the more dividends that get reinvested, the more dividend raises that happen with each of those individual ETFs. Your yield on cost can go way up above 10%. And if you're in it for multiple decades, that can even get up as high as like 30%, meaning the amount of money that you have invested with your own active dollars that you've put into the account, you're getting about 25-30% of that money in dividends reinvested each and every year in the account. That's what the dividend snowball is all about. It takes time. I'm not going to lie to you guys, but if you do it the right way, you have a house of bricks of dividend income coming in that is going to go up each and every single year like clockwork, even when you get to the point where you're living off of the dividends and you're no longer reinvesting them back into the account. So guys, let me know which ETF here is your favorite. Which ones do you invest in? And let me know down in the comments below which one you think may be the one that ends the year at the #1 slot. Will VYMI hold off the U.S. stocks for the remainder of 2025, or are we going to see a rebound in the U.S. stocks as the coming weeks and months fall off the calendar here, and we get more and more time for these guys to be in the ring? Finally, let me know if you have any questions, anything that you would like me to specifically cover or go more in depth on, either down there in the comments, or you can send me an email to dgicrab@yahoo.com. I'm always happy to respond to your email with an email. And if you like, I can even make a video response. I'll keep you anonymous, of course, but I can do a video response to any question that may need a bit more detail, so we can discuss it as a community and help each other all become better dividend growth stock investors together. So this is another episode of the Great ETF Race. Thank you for watching. Please like and subscribe, and I will see you on the next one.